This is another recap of day 64 and July 24, 2024, Wednesday. So I'm gonna recap both EU and gold in a single video. So in EU, I got no trade today, but in gold, I took one loss on this day. So let me show you my pre-session analysis of both EU as well as gold, and also tell you why I didn't get any trades in EU and why I got a loss in gold. Jumping into the daily chart. So in EU, the daily is bearish. So this is a daily strong swing high. This is a weak swing low. And if I zoom into the current price action, we can see the price has swept this quasi liquidity, made a bearish top. So now, and it has also tapped into this demand. So what I'm expecting is price to move up to mitigate the supply, and then it can start to push down to make to stop. The run to to continue this bearish order flow to take out this weak swing low. Obviously, this is an expectation, but price need not always want to win. Only if the people consider this as premium pricings, and this they will start to sell. So for me, this is a weak, strong swing high, and I want this to hold. But for some people, people see from different angles. So for people seeing from different angles, they can see this order flow, this bullish order flow developing. The price can come down, and then it can start to follow this bullish order. For me, this is a strong swing and this is a weak swing, as per my analysis. So this is a 4-hour chart where the 4-hour has made a swing boss and then an internal break of structure on the downside. So this is, this may be a demand in 4-hour, demand in daily, but in 4-hour it's just, low resistance liquidity build-up. So what I'm actually expecting is price to, push down to take out all these low resistance liquidity. But also there is another possibility is that price can go up to mitigate this 4-hour supply before pushing down. So I'll be using my lower time frame as a guide to judge today's session direction. Swing is bullish, internal is bearish, and swing pullback phase. There is no 4-hour demand inside the daily demand. All I can see is a ton of low resistance and liquidity. Thus, I'll wait for the price to make a bullish chop before looking for longs to play the 4-hour internal pullback. So there are some demand zones in the H1 within the daily demand, but I don't think they will hold because it's just the low resistance liquidity in 4-hour time frame. So zooming in, we can see in H1 the swing structure is bearish and the internal is also bearish, and the price has tapped into the high time frame POI. So what does that mean? So we can look for phase C longs. Since we are support of high time frame POI, you can look for phase D longs and phase A2 shorts or low probability because prices start from the high time frame POI. So this could give a strong reaction which can initiate the medium time frame swing pullback. So swing is bearish, internal is bearish, price is in the daily demand zone, price in the high time frame POI plus medium time frame chop. So we look to take long when the price reaches the medium time frame POI using the lower time frame entry levels. So these are the phase D criteria. So price tapping into the high time frame POI, check high time frame POI with a score of at least 4 by it. So if you want, you can jump to daily and check whether it has 4 by it. So these are the 8 criteria. Must have swept liquidity as displacement, where it's in the order book unmitigated, must have swept an order book. So around 5 criteria was filled, and there is this medium time frame chop. So 3 out of 4, so it's just a medium probability trade, and there is no decimal divergence. I checked with the X1. So I was expecting the price to come down to this demand and then push up, but the caveat is I'm trading against a strong high, and also there are some H1 demand zones within the daily demand zones which are not yet gated. So this could be a fake break and then push down to dig deeper into the daily demand zone. So it's similar to what we expect in H1 POI M50 to make an LC2U. So for daily, H1 can make an LC2. So it's possible. So session update at 7:30. So trading against the internal high. That's the first caveat. H1 demand within the daily demand not yet mitigated, and there is always Asian lows below my stop which could be taken. And at 7:36, while I was writing this note, price took out this POI. So there was no lit, nothing, so I didn't take any trades. But I was not even if the price takes out this low, I'll be not looking for shorts because price has tapped into the high time frame POI. So again, I'll be waiting for the medium time frame chart to enter into the freshly formed POI to take longs because shorts are strictly restricted because they are very low profit. And price came a bit deeper. It made a bit strong push down and then a push up. And I didn't get any reasonable POIs. So this was the only POI that I was looking to trade, but still this didn't see any liquidity and did not have any inducement. So I was actually not interested in taking any trades on this day. So I just left the price. So maybe, but the thing is, it has made a internal breakout structure in the upside. So from tomorrow I can look to play the the bullish internal order flow. I could take some profits. So that's all from EU. I didn't get any trades. So from gold perspective, I lost a trade and it was in this New York session. So I will show you what analysis I made and how I took the trade and what led to that loss. So swing is bullish. There is no internal. This is the internal low, but the internal low is not yet closed below. So it has just swept this. Maybe it has swept the fair value gap and then the price is pushed above. So I could consider this as a bearish stock. So I can play the fractal pullback. Fractal is actually bearish here. So swing is bullish, internal is also bullish. So if I consider this as the internal low, the internal is bullish and the fractal is bearish. So I'm expecting the price to be bullish to mitigate the supply to make a deeper pullback. Once the price taps into the supply, it can push down deeper. Price made a bearish shock, that's expecting a deeper pullback. This is 4R. 4R has made a swing was the 4R swing structure is bullish and the interim structure is bearish, but now it has currently shifted to bullish. So and it has also tapped into the equilibrium point. Just it has tapped, but it's enough for people to consider this as discount prices and they'll start to look for buys. So since the price took the equilibrium and it has made an internal boss up, so it's time to look for longs. Since the swing is bullish, internal is bullish on the external phase, price mitigated this demand. After sweeping the sell side liquidity, it has swept the sell side liquidity, tapped into the demand, pushed up. So all three boxes are ticked. There's high chance that the price may continue this bullish order flow till it takes out the weak streak high. But the caveat is there are there are still room for the price to go down. That's the first risk factor. And the second is that of this low resistance liquidity. The price can just break it through and it can take out the strong. So it's both. This is H1. H1 swing structure is bullish, internal is bullish. Same, we are looking to play the field. So this is the internal structure. Internal structure is bullish, and I was playing the internal pullback. I'm not playing the phase A longs, but rather phase D shorts. Why? I know what's running in your mind. I know that's low probability, but still there are some confluences which forced me to take the trade. So let's see what are those. Swing is bullish, internal is bullish, phase A longs are high probability, but I didn't take the phase A. Price tapped into the H1 supply, thus I'm expecting internal pullback into the demand. So this is the first notion in first sentence where my brain started to think started to think of shorts. Or second, it's looking for additional confluences. So the second confluence is low resistance buildup of liquidity, where the price can strip this liquidity, tap into this demand, and then it can go up. So I know that the price can come down, make a pullback to go up. I want to play the internal pullback. So first, it tap into the demand. Second, the mind has my mind has fixed that it should play short, so it's looking for sell side confluences, sell side liquidity. So here is one. This high probability demand from which the price can react from to make another higher line and higher low, higher high, higher low. So now we are having 3 points to support the shorts. Price has tapped into the H1 supply. Price has now there is sell side liquidity for the price to target. Also there is a H1 demand from which the price can mitigate and continue its internal bullish order. So three confluences are heading up. Again, price has made a bearish chop. Both confluences. This is H1 chart. So bearish chop is, which means that maybe the session order flow could be bearish today. I mean, not totally bearish. At least it could be bearish for at least the London session could be bearish. So this is this session update at 98.55. Price has now made a bearish drop. That's expecting the price to continue going down, keeping the sell side liquid. Waiting for the price to mitigate the supply to look for increase. So this is a fresh QI. If the price comes up, can start go down at least to take out the sell side. So here comes the yes, paste the price tapping into the high time frame QI. No, this box is also not set because this indicates the high time frame QI, which is 4 out of 8, but this is a medium time frame QI. So actually this box should not be big, but since my belief system has, uh, I believe that the price is going to come down, I'm looking for shorts, so I'm searching for confluences. So I take this box, did not read this high time frame QI, but once I took a loss, then once I looked from the neutral eyes, then I saw this is not a high time frame POI, this is a medium time frame POI. Also, there is a medium chop, and one more confluence is adding up SMT divergence, bearish SMT divergence. So, 5 confluences that I am having, definitely my mind would be saying shorts, shorts, shorts. And these are the POI criteria. It has a displacement. Yeah, it must have, it didn't simply, but it has an inducement, and it's unmitigated, and it's now formed in the kill zone. So there are a ton of POI criteria. So again, other confluences is low resistance liquidity here. So what are the risk factors? But though my mind is pushing to we take shorts, back of my mind, I know what are the risk factors are. First, did not mitigate the high time to POI, it just mitigated the medium time to POI. Second is I am using LC1, using M15 lead for an aggressive entry or an aggressive approach. And here is that liquidity lead. Here is that lead. I wanted that lead to be swept and then price to push down, but price just came down. I didn't take any trades here. Again, there was one more lead formed, and with this beautiful wick, I decided, okay, price is going to come down. I'm going to place the trade. I know this is a good trade. I was not reckless. I had my positive conferences with me, but some of the boxes are not ticked. But all the boxes will not be ticked most of the time. If you want all the boxes to be ticked, then you need to take at least 2 to 3 trades in a year. So I can't take those kind of trades. So I placed a sell order at 12.20 in the New York session. The time and price, I placed a trade in the current. But I got stopped out. Somehow in the New York session, the demand took control and took my stops. So it's just a pattern. The patterns has occurred previously, but the same pattern will not occur in the future. So each moment is unique in the market. Anytime the demand can take control, anytime the supply can take control. This time, for me, the demand took control and took my stops. So I think the trade lasted only for about 20 minutes. Sometimes, price will be dancing around my stop loss and profit region for at least 1 hour to 1.5 hours. Then it will take my stops. So that would be very frustrating. This is very cool. I know the results as soon as well. I had my confluences, but it didn't play out. It's fine. In the long run, my odds would definitely play. So at 12.50, I just reanalyzed. So I just saw from a bullish eyes. I saw that this was a POI which the price tapped into and made a bullish drop. So I could expect the price to continue the bullish order flow, or one more possibility is there. You can see this could be an LC2A. Price has made a fake break and then took the liquidity above. So I could enter below right here. But since I already took a loss, now I'm becoming more conservative. Now I'm not taking any riskier trades. So I was waiting for the price to show me what the direction of the price is. And the price started to rally. It didn't give me any chance to enter. It started to rally up. There is no good POIs from which I can trade. So that's it. Ended up with the one single loss. Okay, guys. There is some. This is not a valid pasty shorts, but still, I found some other confluences along with the pasty rules. I know there is some kind of discretion, but this is these kind of discretions here and there. That's the one that creates intuition power. and this will allow us to have an edge over the others in the long term. This is a good loss. I'm not worrying, I'm not going to take any measurable steps. I'm just going to do the same thing again and again. In the long run, this could play out, and I could be profitable at the end of the year. So that's it. See you guys tomorrow. Bye.